Hello traders, it's Victoria from TradePro Academy. I hope everyone is doing well. And as we've done with every year in the past, we're going to be talking about the best TradingView indicator for the following year in 2023. So the best TradingView indicator in 2023 is something that we've used a lot, especially when trading ETFs. Now this indicator is not your conventional indicator, right? It is a chart that we use on a split screen on TradingView that I'm going to show you exactly how we find and do. But this is a super good indicator mainly for ETFs and day trading. So this indicator on TradingView is what we're going to be using for the SPY, the triple Qs, IWM, stuff like that, and also can be used for large mega cap stocks. However, this is going to be very effective on ETFs, and we're going to show you exactly why. So without further ado, let's go right into this video right after this intro. The advanced decline indicator, right? It is a TradingView chart actually, which denotes the breadth in the market. What it tells us, it is how many stocks are advancing or declining in the market as a whole. The max reading is about 7,000, maybe a bit over 7,000 stocks. Now, this indicator can be seen more so as an oscillator that oscillates between 7,000 and negative 7,000. What this tells us is that the strength of the market based on stocks advancing, declining, aka breadth, that leads us to day trades, right? Because we're looking at this on an individual intraday session trade, and we're going to be using it to day trade ETFs like the SPY. So this is a very SPY and triple Q focused indicator that can help you identify the strength of the trend, if there's a trend, maybe the reversal of a trend or the weakness of a trend. It does a lot of different things and helps keep you on board and on side of the right market movement. Now, to help you identify this a little more, help you clarify this indicator, what we're going to have to do is jump away from this, jump on the screen and take a look at these charts, and I'll show you from step one how to find it and what to do with it. So let's go ahead and jump right into that.
Hello, traders. All right, so we're in front of the screens right now, and this is exactly what I want to show you guys. So we're going to be talking about the best indicator for 2023 for day trading, right? Especially if you're day trading these ETFs. Now, this is very specific to the ETFs, and this is what we got cooking right here. The US advancing, declining, right? This is what we're going to be looking at, and you can see it's a pretty strong oscillator here. Now, to look at this, right, we got to take a look at this, the ticker symbol, right? And you got to split up the screen if you're going to look at this with your other charts. ADV, DEC, .US, boom, there is your US advanced decline. You can change up the layout of the charts, right? So you can have it there. I have it in a split screen between the SPY, the triple Qs, and the advanced decline so I can get a better feel for what's going on. Now, if we quickly explain what's going on here with the advanced decline, it is an oscillator, right? You can see it goes from super negative to super positive territory. And what that's going to tell us is the strength of the trend, right? If the trend is going to follow through and what we can do with that. Now, usually we gap up, gap down, whatever the case may be, and you get some kind of follow through in terms of the trend. Now, it's very important to see if these advanced decline tickers actually hold out, right? Very positive or very negative as price action actually trades on the SPY, for example. So there are several occasions here like today where we started very weak and strong, right? We started very weak to begin with, and we were thinking, well, this thing's going to crater into the earth, right? The Earth's core. Now, instead, we got these huge pops in terms of the advanced decline, and you'll notice with the SPY itself, we got that as well. So in these different scenarios, right, we'll zoom out and we'll show you how this necessarily works. But you can see the peak extreme is going to be around 7,000, and the peak downside is going to be around negative 7,000. Now, the key with this indicator, if you will, is that even if it stays at a very high level of advancing or a very low level of declining and it doesn't really move, that doesn't necessarily mean that there's no more juice in the trend itself, right? That means that there is a consistent amount of stocks either advancing or declining, and they're going to hold it out, right? If we get up to 6,000 and we stay at level at 6,000, that means that there's a lot of stocks that are advancing, and you should still take that as a bullish indication, right? Same thing to the downside. Now, once you start getting past 2,000-3,000 to either end, that's when the real magic happens. That's when you get a very large move. Now, to even add to that, even if you're still in positive territory, but the advanced decline drops off very aggressively from very high positive to low positive, it's still an indication of a potential drop in the market. So we got to look at a few days in a row to see how this guy works, right? Even if we start from this day right here on December 2nd, Monday, December 2nd, we'll zoom out here on the SPY so we can see it with the advanced decline. Monday, December 2nd, we open down here somewhere, right? We get the market open. It's in and around this region right here. And you can see on December 2nd what happens, right? The advanced decline, it starts very, very negative because we had a massive gap to the downside. But all of a sudden, you see a base forming in the advanced decline, and the market can no longer break this 400 region. Very, very key region on the SPY. You're getting a base with some stocks starting to advance. And at a certain point, you get a spike in the advanced decline. It does continue for pretty much the remainder of the day, which leads us to believe that there is bullish sentiment, right? Even slight little pullbacks, the advanced decline does not change its structure for us to actually look for the shorts in this market, right? Instead, keeping on the long side. Again, same thing here. The following day on December 5th, we get a very strong down move in the advanced decline. That's exactly what ensues throughout the market. If we want to zoom in a little more, right, there have been a lot of range days, but I do want to zoom in on one of them right here, right, sitting on December 6th, right, December 6th. If you zoom in on the advanced decline, what happens is at the beginning of the day, you get a very, very nice gap to the upside, right? You get a very nice gap to the upside. And you can see right away the advanced decline starts to really hold out, right? You're getting a very strong wick, a green wick on this advanced decline as the market's starting to drop off. And all of a sudden, boom, we get a very big advanced decline move below the zero marker, right? The longs are no longer entertained at a key resistance, the same resistance that was support in the last example, and down the market goes. So the key how to use this is see, is the advanced decline holding in one direction or the other? Is it stubbornly holding? And what I mean by that is it being stubborn in the market, as in it's not rallying anymore while the market is rallying. Is it holding out and potentially reversing? That can cause reversals. And is it continuously dropping? In this case, yes, to continue the trend move. So even in a day like today, if we zoom out on today, December 8th at the time, you get a very strict move to the downside. But all of a sudden, the advanced decline says, you know what? Let's go to December 8th, first of all. All of a sudden, the advanced decline says, you know what? Here's a big spike for you. Nice, green, juicy candle. Even before that, the advanced decline stopped dropping. That's another key. If it stops its original move and trend move, that's where you have to be very cautious. Nice, big green candle. That was just go time right there. Even on the next candle, if you're looking for the longs, the advanced decline is going so strong that you can afford to take a little more of a risk on a wider stop to see this thing through. And there we go. The remainder of the day, you can see that the advanced decline is trickling back towards the zero marker from hitting a pretty high peak, about 4,500, meaning that most rallies are shortable in the SPY rather than trying to buy these dips. You can see lower lows and lower highs on the advanced decline, meaning more stocks are starting to decline, meaning that there is a higher probability you're going to be able to sell rallies for a better profit than trying to buy dips, right? And vice versa. If the advanced decline is slowly trickling higher highs and higher lows, you're going to have a better time trying to buy dips, even in a range, than you are to sell rips. This is our favorite indicator to trade the S&P ETF options, the SPY, and the triple Qs, mainly ETFs for 2023. This is something that you could use with other indicators like volume profile, and other things that you have. But this is a great trend tool, a great trend reversal tool, and a continuation tool. So if you haven't looked at this, add this to your day trading list. Take a look at it. Try it out and let us know in the comments how it goes. How did you like it? Did you like it a lot or just a little? Let us know and hit that like button, hit that subscribe button. We'll see you guys next time in more videos like these. Don't forget to check out the resources in the description down below, and we'll see you guys next week.